if you have more money than time and you're arrogant and egotistical and you just pick the obvious, then if the volatility goes away, you buy Bitcoin. If people in the rest of the world knew what I know and they understood and they agreed with me, Bitcoin would go to $10 million tomorrow. And if Bitcoin went to $10 million tomorrow, I want you to think about how you would feel and how your viewers would feel, because you would lose 20 years of stacking opportunity during which you get to buy at less than $10 million. So the difference between $10 million and 100,000, that's what you give up if the volatility goes away and people start to agree with you. So I'll end with just one thought, which is...
Michael Saylor offers a compelling and progressive analysis of Bitcoin, speculating that it will have the ability to completely change the financial system. With a base case forecast of $13 million per Bitcoin by 2045, he expects the cryptocurrency to expand at an average annual rate of 29% over the course of the next 20 years. Even though these numbers might seem out of the usual, Saylor carefully outlines the logic for his prediction. For him, Bitcoin is more than simply an investment. It represents the highest level of digital property, providing a safe, limited, and inflation-proof store of value in a world where fiat currencies are losing value. Saylor's thoughts on Bitcoin's notorious volatility is among its most intriguing aspects. Although many perceive volatility as a risk, Saylor presents it as a benefit, characterizing it as a mechanism that discourages short-term speculators and rewards patient, long-term investors. As we dive deeper into Michael Saylor's insights, take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Thank you and enjoy the video.
Sell Bitcoin. But I also say to people, just keep in mind, like my long-term forecast for Bitcoin is it goes up 29% a year on average for the next 21 years. And so I look out to the year 2045 and I think it's like, base case is 13 million a coin. And it could go faster, it could go slower. But when you think about that, you're like, well, every Bitcoin you sell is going to cost you $13 million. Or if you decide to go buy a Ferrari or a sports car with 3 or 4 Bitcoin or 5, it's a $65 million Ferrari.
Yeah.
So think really hard. Do you want the Ferrari, which will be good, may get you a few dates and people will think you're cool for the next few years. But would you rather have $65 million 20 years out? Because you can retire on that and live a very comfortable life. So I cling to my Bitcoin. You do not sell your Bitcoin.
So when's, in your mind, Bitcoin hits $1 million when?
Yeah, it's difficult to give you a short-term forecast. So I'm not going to give you an exact date. I will just tell you I think it's 13 million in the year 2045. I think it'll grow between 30 and 60% a year for the next 5 to 10 years. And then I think it's growing 60% a year right now. I think it will decelerate to be growing 20% a year 21 years out. And so it could surge up, quite quickly over the next 4 years, and you would get there in 4 to 8 years. But, it's very volatile. It takes a random path, and we can't be quite sure. So I think I would take a more open-minded view. I would just assume that it's going to keep grinding up. It'll surge up. It'll smash down. It'll do the serpentine thing. And the volatility is good because if it was straight line growing and everybody saw that it was very predictable, then a bunch of people richer than you that you don't like would just buy it all and you wouldn't be able to get any. The volatility is a gift to the faithful. The volatility, for example, I started buying Bitcoin and it soared up to 66,000. It crashed down to 40,000. It zoomed up to 60,000 something again. It crashed down to 16,000. It came back up, and all the way it was very volatile and uncertain. And we were able to go from $250 million in Bitcoin to buying 25 billion to having 42 billion in Bitcoin. And we took our company from 600 million in enterprise value to more than 100 billion. If Bitcoin had been predictable, if Bitcoin had just grown 30% or 60% consistently, 5% a month or something, then Warren Buffett, Charlie Munger, Jamie Dimon, everybody in the world, Bill Gates, they all would have bought it. I wouldn't get any. I would have 1/25th as much. We wouldn't be a $100 billion company. We might be a $5 billion company. But the volatility was a gift to the faithful. It scares away the tourist. It scares away the lazy. It scares away the people that are already conventionally rich, that have all the money. If you're a 20-something or a 30-something and you're willing to do the work, if you're willing to spend 100 hours or 200 hours, if you have more time than money, then the volatility of Bitcoin is a gift to you. If you have more money than time and you're arrogant and egotistical and you just pick the obvious, then if the volatility goes away, you buy Bitcoin. If people in the rest of the world knew what I know and they understood and they agreed with me, Bitcoin would go to $10 million tomorrow. And if Bitcoin went to $10 million tomorrow, I want you to think about how you would feel and how your viewers would feel, because you would lose 20 years of stacking opportunity during which you get to buy at less than $10 million. So the difference between $10 million and 100,000, that's what you give up if the volatility goes away and people start to agree with you.
Michael Saylor highlights the unique qualities of Bitcoin that set it apart from other financial possibilities. No other asset can match its total scarcity, which makes it the first and only type of digital property. Bitcoin's unparalleled security and worldwide accessibility are intended to safeguard and enable its owners. It is not vulnerable to censorship, seizure, or dilution like traditional assets are. This implies that it cannot be manipulated or controlled by any institution, government, or individuals. Because of its decentralized structure, which guarantees genuine financial independence, Bitcoin is more than just an investment. It is a groundbreaking instrument for generating and conserving wealth in an equitable, democratic manner. Now, let's dive back into Michael Saylor's interview for more of her expert insights.
So I'll end with just one thought, which is, in my life, I've made a bunch of very successful investments. I bought Facebook, I bought Apple, I bought Google, I bought Amazon, I bought Bitcoin. And there's a simple formula if you want to make 10x your money or even 100x your money. And this is the formula. Find something in the world everybody needs, nobody can stop, and few people understand. And if you find that, if it's like obvious, Amazon, Google, Facebook, iPhones, Bitcoin, digital capital, digital money, digital photos, digital relationships, digital video, if it's obvious and nobody can stop it, but you go and you talk to a bunch of people with more money than you, and they're older than you, and they're more successful than you, and they all say, I don't get it. Okay, at that point, the cowardly response, the loser response is, well, a lot of people told me to give up on it because they don't get it, so I won't get it. And the right response is, I'm going to study it and decide if they're wrong, and I'm going to make a decision for myself. And if I got it, if I bought Amazon when Wall Street hated it, if I bought Facebook and Google and Apple when Wall Street hated it, if I bought Bitcoin when Wall Street hated it, then I'm getting rich. I think when I was thinking about it, it was 4,000 or 5,000 a coin for Bitcoin. And when we started buying it in size, it was in the mid 9,000s and 10,000, 11,000, and it's 10x since then. But to be clear, the brilliant idea of Bitcoin is digital property. It's cyber Manhattan. I've created a city in cyberspace that's 276 blocks wide, 276 blocks high, 276 blocks deep. You're buying 1/21 millionth of all the money that there's ever going to be in cyberspace. And one day, the 8 billion people are going to want to put some of their money there. And it's the most simple idea imaginable. Do you want to buy 1/21 millionth of all the money in the world for all of eternity? Like the product's going to be the same in 100 years, 500 years, 1,000 years? So think of it like, buying Manhattan in 1750, and you're 100 years late. And someone goes, you're 100 years late. The guy that's selling you the building paid less than you're going to pay. Aren't you afraid you're overpaying? And it's like, well, I'm going to dump it to a guy in 1770 for more. And that's stupid, because you should buy it every year from 1650 to today. And it's the greatest city in America. So why wouldn't you want to own 67 blocks of Manhattan? Just like why wouldn't you own 67 blocks of Bitcoin? So you're never going to be too late if you understand that the future digital economy is going to be built on top of 21 million blocks of Bitcoin. I think in March of 2020, during the COVID panic and the lockdowns, the economy came to a grinding halt. Everybody went home. We had the 15 days to stop the spread. There was a lot of anxiety in the economy. And then we saw interest rates get taken to zero. And it's almost like the economy just stopped. I mean, traffic stopped, cruise ships stopped, airplanes stopped, restaurants closed, hotels closed. Interest rates went to zero. And I was sitting in front of my pool in Miami Beach, and it was just dead calm. But I was watching CNBC, and in CNBC, at some point, it became clear that that if you actually were in Wall Street or you owned a bunch of financial assets, you're probably going to be okay. But if you're on Main Street and you're trying to actually do things like run a restaurant or a yoga salon, you were going to have a bad year. And so at that point, I said, well, I have all this cash and it's worthless, like zero interest rates. And the central banker said, we're not even thinking about raising interest rates for 4 years. So you have a non-performing asset. And then I looked at the government basically printing money. I thought if we shut down the economy for 2 years, that's going to cost a lot of money. And that's going to get printed. And so I saw hyperinflation, coming at the end of those lockdowns. And I noticed my money was a melting ice cube. And I thought, well, I need to do something with the money before it becomes worth 40% less.
Michael Saylor concludes by presenting a clear and convincing example that captures the heart of Bitcoin's worth and its prospects. As digital property, or cyber Manhattan, he characterizes Bitcoin as a limited and irreplaceable possession. He uses the example of purchasing Manhattan real estate in the early years of 1750 to illustrate its relevance, pointing out that while some people would be concerned that they're missing the opportunity, true visionaries know that such a special asset only increases in value with time. He claims that Bitcoin is similar to owning a piece of the economy of the future, a set supply of 21 million blocks that will support the digital financial system for many generations to come. During the COVID-19 pandemic, when interest rates fell to zero, businesses closed, and governments turned to extraordinary money creation, Saylor describes having an insight. He came to the realization that cash had turned into a melting ice cube. This non-performing asset was rapidly losing value as a result of inflation and economic uncertainty. He began to focus on Bitcoin at this point because he saw it as a safe, inflation-proof way to hold money. The simplicity of Bitcoin, he stresses, is what makes it so brilliant. It is a limited, unchanging, and globally available form of wealth that is impervious to the manipulation, expropriation, and dilution that befall conventional currencies and assets. According to Saylor, purchasing Bitcoin is an investment in the future of the digital economy rather than merely safeguarding a piece of digital property. His message is unmistakable. Whether you bought Bitcoin early or late, it's a once-in-a-lifetime chance to hold a limited portion of a groundbreaking financial system that will only become more significant as the world gets more digital. And as always, happy investing.